Hey everyone, Micron Technology is one of the most recent stocks I've added to my list of top stocks to buy. So I wanted to take a little bite-sized look into the company's recent developments from the CFO's perspective. So let's dive right in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so the CFO saying that in the third quarter, revenue came in at $6.8 billion, which was up 82% year over year. Driving that growth was a big increase in pricing power. Now, shipment demand for DRAM declined in the mid-single-digit percentage, but prices increased by approximately 20%. Now, if you recall, a few quarters ago when I was talking about Micron Technology, I highlighted that they were on the precipice of a surge in demand, and management highlighted that rather than increasing supply significantly to meet that demand, that they were going to first just increase prices to capitalize on rising demand. And I like that strategy because they were coming off a cyclical bottom. You want to make sure this upturn is really a longer lasting upturn in the cycle before you start meaningfully increasing supply. Now, as we're going to see a bit later in the video, it does seem like this is a meaningful increase in the cycle driven by the replacement cycle in personal computers and mobile devices and the tailwind provided by artificial intelligence. So we saw what was going on with its DRAM segment. Now let's look at its NAND segment, where it saw bit shipments increase in the high single-digit percentage range, and prices also increased by roughly 20%. So in both DRAM and NAND, in the most recent quarter, they experienced a 20% increase year over year in prices. Now that was great news for Micron Technology because they were also able to deliver cost cuts and produce more efficiently. So that led to that increase in profitability in the latest quarter. Now looking at a business unit perspective, for the data center, revenue more than doubled year over year. And this is Micron taking advantage of the rising effectiveness in artificial intelligence, in the growing investments in artificial intelligence. Micron Technology is playing a role in the data center. As you see here, their revenue more than doubling year over year. Additionally, revenue in automotive they experienced a 16% increase from the previous quarter to $1.3 billion as a result of increasing computing power required in cars nowadays. You're noticing that newer and newer models are requiring more and more computing power, and that's been great news for Micron Technology. It sees this as a nice area of growth going forward several years. Of course, nowhere near the growth opportunity in data center and artificial intelligence, but automotive is a big opportunity as well, not to be overlooked for Micron Technology stock investors. So their gross profit margin was driven primarily by higher pricing and helped by product mix and cost reductions. Their gross profit margin in the latest quarter was 28%, which was up by over 8 percentage points from the previous quarter. So as I highlighted earlier, rather than increasing supply significantly, they benefited by pricing power and efficiency improvements, and they were able to both increase pricing and lower costs, which is a nice 1-2 punch, bringing its gross profit margin higher in the quarter. Operating cash flow of $2.5 billion in Q3 represented 36% of revenue, which is on the better side of all of companies in the world generating cash flow from operations. So for every $100 in sales that Micron Technology generated, 36% of that turned into cash flow. Capital expenditures came in at $2.1 billion during the quarter, and they generated free cash flow of $425 million. This capital expenditure number is what concerned a lot of investors and why the stock price fell following their latest earnings release. Given these last few quarters, they did not invest significantly in CapEx in 2024. In fact, CapEx was down in 2024 compared to 2023, even though demand in the market jumped significantly year over year. And so 2024 was a down year. But management told investors in these conference call transcripts that they are now increasing capital expenditure because they now see this increase in demand as sustainable. They see this longer lasting, and so they're comfortable investing in manufacturing expansion. Also, it's helped by government incentives. The U.S. government is granting Micron Technology north of $5 billion to help facilitate manufacturing expansion in the United States. So in the third quarter, their ending inventory was $8.5 billion, or 155 days of inventory, which declined 5 days from the prior quarter. And their leading edge supply continues to be very tight for both DRAM and NAND. So in other words, what management is saying here is they have a lot of supply, but most of this supply is for their, lower end technology, not the cutting edge technology. Their cutting edge technology or their latest, most innovative products, the supply is constrained there. It's very tight, meaning they're almost sold out. But for the older generation technology, that's where they have a significant amount of their inventory, which could be a risk because they might need to discount that to get it sold. So it is encouraging to see that it declined 5 days from the prior quarter and it continues moving downward. But still, they may need to discount some of that inventory to get it off the shelf. So looking ahead, the CFO is saying that they expect DRAM bit shipments to be flat-ish and NAND shipments to be up slightly in Q4 in their upcoming quarter. They forecast shipment growth to strengthen modestly in the November quarter. So in the current quarter, it's going to be flat, and then it's going to increase in the back end of the year. Additionally, they expect continued gross profit margin expansion. Price trends remain positive, supported by favorable supply and demand conditions. What I talked about earlier, right? They didn't increase manufacturing supply by all that much, and that's been an industry-wide dynamic. Most participants in the industry didn't increase supply by all that much because there's a lot of inventory backlog available, right? I highlighted earlier that they also have more inventory of their older generation products. Inventory in the channels, various companies are elevated still. The cyclical bottom in the semiconductor industry is just now turning upward. It's only been like 2, maybe 3 quarters where it's turning upward. But companies still had all that inventory built up, so they didn't need to expand manufacturing and supply just yet. They want to work through some of that inventory and price them higher before they really increase supply. And that's working in companies' favor. And that's partly why I had upgraded Micron Technology to a buy and to one of the top stocks to buy because of these favorable demand conditions and also how the companies were responding to the rebound in the market, increasing prices, which is always good news for investors. When almost every company in the industry is raising prices, that's good news for investors. And I saw a lot of those good prospects for Micron Technology and Micron Technology stock investors. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.